Yo, what's going on, guys? Welcome back to the channel. Today's video, I'm going to go over the trades that we took this week to stay green, and this week was wild. I didn't have a video up on Thursday. I just didn't have the time to, and then on, I think it was like Tuesday, I had a video up, but for some reason, YouTube didn't process the video, and it was stuck on processing for like a whole day, so I just didn't end up posting the video, so, I never got a video out, but market has been absolutely wild the last like couple of days. I mean, we had two 1,000 point down days in a row. I mean, so many people probably lost a lot of money trying to like call bottoms and buy dips, but that's just not something that I tried to do at all because the system pretty much kept us on the right side of the market. I mean, it was definitely higher risk to trade during these times, but I mean, if you looked at the charts on the 0DT like the last 2 days, I mean, there's really no reason to be tossing longs on the table at all. So, if we pulled up the chart from the week, I mean, obviously the market was bearish the entire week. You can see what happened. 30-minute ended up crossing, and then we just, obviously just continued lower, as you guys saw with the massive down days in the market. I mean, we dropped, I think, like 20% from the highs on QQQ. I think from SPY, we dropped like 16%. I mean, it's been a wild last couple of weeks for sure, or last week for sure. And I'm gonna go over what you could have taken. So these are some screenshots from earlier in the week, and this is what we took on Monday. This is what I tried to take, and I actually took a loss on this trade, and it was a pretty simple trade. So the reason I went short on this trade because I was pretty much playing this rejection here at the 50. This is the only screenshot I have from it, but pretty much this red candle right here ended up closing below the green line, which is the 10 SMA, and once we closed below the 10, I went short because we got close enough to the 50 where I'm like, okay, if we close below this 10, I'm gonna go short because we pretty much rejected it at that point, and we closed below it. NQ dumped like 30 points probably, and then ended up coming back up to my entry and ended up ripping higher, and I ended up stopping out, I think for like, I think might have been like 25-30 points. So, that was the loss I took this week. I think that was the only loss I took throughout the week. It was pretty, it was a small loss. I mean, I'm not, I usually never take big losses because I know how to limit my risk on my trades. And, that's how we started the week. It was a small red day for me. I lost like $200 across all my accounts. I mean, is what it is. Very, very small loss. And then we ended up coming into Tuesday with this beautiful 0DT cross right here. But first up on the list, before this cross happened, we ended up playing this negative cross to the left side of this chart. So, I think the market was neutral at the time. So, we were playing, either side of the premiums pretty much. So the 10's going below the 50 on the calls. So we go short. It's pretty simple. It's the same as like a positive cross, just doing the opposite. So 10's going below the 50. 50 started curl down. Caught a very nice move out of it. I think this went over 100 points on NQ, if I believe. Could be wrong on that, but I know we got a really, really, really nice dump out of it. And then obviously, all we had to do is wait for this chart to recross. 10's going below the 50 here. This was my entry. It's pretty simple. The 10's up super hard. The 50's already curling up. This is a good entry because I know this is most likely going to cross right here. And then we end up seeing a very nice move out of it. And I think we got another like 60 points on NQ. It's very simple, man. There's no other strategy out there like the system. All we're doing is playing crosses on these charts. It's very, very simple. In my opinion, there's not an easier way to trade. All you're doing is playing two lines crossing. I mean, it really is not hard. You just have to know the right trades to take. I say this all the time. You guys probably heard this a million times, but knowing what trades you want to be taking is most important. It's not just, okay, I'm going to pull up these two 0-day charts and just slap any trade it gives me and not know like the reasoning why, like why are we taking these trades? It's like, okay, we're taking this trade right here because, okay, I know the market's neutral. If we get a cross on the 0-day chart, that means the bulls are probably going to take this higher intraday. But since there's no trend, I'm not going to hold this like expecting a massive move like we would if we are trending. If we got a 0-day cross in a trending market, okay, we could expect a really, really explosive move out of this and potentially hold this for a, like 70 to 80 points versus getting our 50 points and, pretty much selling everything, because when we're neutral, that's what we do. We take our profits earlier versus when we're in trend, we could expect a way bigger move and you hold for longer. And that's where you can milk out the market, is when we have that trend. Obviously, you guys know that, hopefully, if you're, been watching the videos. But yeah, it's very simple. And then, this was the initial entry. Then we got the move there. And then this was another trade we took. So this was on Wednesday, I believe. So again, this is just a simple 0DT cross. So 10's going above the 50 here. We just got in. I'm not exactly sure the entry on this, but you would have waited for this 50 to curl. That's an important factor when taking a trade. Is the 50 SMA pretty much tells you if you could enter when the 10 crosses the 50. So if the 50 is down, you don't enter. And when we initially crossed, the 50 was down. I do remember this, and then eventually curled on one of these candles right here. You can see it start to get a curl up now. You can see it's hard to see on this picture, but we were sloped down, sloped down, sloped down, and then it starts to level out right here and curl up. So you would have been entered somewhere around here. And then your stop loss is the 50. I saw some people stop out of this trade when we did lose the 10. The only time I really use the 10 SMA as my stop is when either I'm trailing my stop loss or I'm, we're in a very volatile market and I don't want to hold all the way down to the 50. So, like if we're moving like large amounts of points that, realistically I'm not going to like hold all the way until the 50 breaks, that's when I would do that. But in this case, the 50 was relatively close to where price was, so I was holding this. There was no initial move, so, the 50's your stop on this. Then we got a big move up here, and that's where you'd sell. And then, obviously, we ended up reclaiming the 10 because this was a neutral market, and, you don't buy this 50 dip down here. Obviously, we didn't even come that close to it, so you wouldn't have bought it anyways. But in a neutral market, the next trade opportunity is when we close back above the 10, close back above the 10 right there, and you see the continuation move out of it. So, very simple 0-day cross. What else we got? Oh, so this is what the initial entries looked like on this chart earlier. So you can see this is where, 10 above the 50, 50 was curling up on one of these candles right here, and then you could see this is what it looked like at the time. And then our stop loss is the 50. The 50 is still sloped up here, so we are at what, $6 a piece. These are at like almost 5, maybe 30. So not too far away from the 50 SMA. So we just hold it until the 50 breaks. Obviously that never happened, and we got a very nice pump out of it. And yeah, that was that. And then this was on the 3rd, which was Thursday, and this was the day I think we were down a ton of points. And since we were in a trending market, and the puts were crossing here, obviously right here though, I'm not taking this put cross, because if you look where the price is here versus the SMAs were all the way down here at the time, this is not a trade you take. If anything, you just wait for this 10 SMA dip, you buy at the 10, and then I know we closed below the 10 right here, but that next candle ended up like opening above the 10. So at that point, just use, keep a tighter stop on this if you did take it, and then if it starts to break below the 10, just get out. But you can see we just held the 10 the whole way, got a nice move lower, and that was that. And then obviously the only other trade would be a 50 dip. So we came down to the 50 here. We got a nice, obviously we didn't tap it exactly, but we came pretty dang close to it. So you could have entered and then obviously just average up once it starts going in your favor. That's something that I really do, I really like to do, is when I take a trade, I am not full size right off the bat. I wait for the trade to go in my favor to add more and average up, and that's where you make the most money in my opinion, is because if that trade doesn't immediately go in your favor, it's like you're not even full size. So if you do take a small loss of like 30 points, okay, I'm not even full size anyways, and then once it starts to go in your favor, okay, you add to your position as it's starting to trend in your direction. And that's exactly what I did on this type of trade, and we popped up in the 10. That's your first take profit on this trade, move your stops, whatever you want to do. In this case, I definitely trimmed because that was a pretty solid move, and also that 10 SMA sloped down super hard, so that's where you would take some profit off, and then your stops even from that point, and then it comes back down, and you would have been stopped out at even right there. And then we tapped the 50 again, and then we eventually broke below it. And if you did buy this dip down here, you stopped out on a closure below the 50 if you rebought the dip. So yeah, that's how you would have played this week pretty much. And then this is an example of what the chart looked like right off of open on the 3rd. So you could see this is not a trade I would take, because at 1, we're 10 minutes in the market. 2, we are literally, the price is at $2 a piece. The 10.50 are all the way at 0.8 and 0.6. So this ended up slapping down really hard, and we got a quick pump. There is no chance that you are holding this, and the risk or reward up here is just not in your favor at all. So this is not a trade you would take. This is something that some people don't understand. You don't just slap any cross. It's if it doesn't make sense to take this cross, when we're this far away from the 10.50, just don't take it. It's just way too much risk on the table. And obviously it worked, but I mean, it was just not a good entry here. I mean, it could pull, you'd want this to pull back here and, you know, dip to the 10 or the 50 before you take an entry here. That's like the ideal scenario. And if you don't get it, you don't get it. The market's always going to be here. There's always going to be another trade. So, you know, that's something you got to understand. You don't need to be taking a million trades a day. You don't need to trade every day. Like if the odds aren't in your favor, don't trade. It's that simple. But some people feel the need to be in a trade constantly and always trading every single day, 24/7 throughout the day. You know, that's just not something that you need to do. All you gotta do is trade when it's in your favor, or if, you know, obviously when we're neutral, you're like, the odds aren't in your favor, but even with the system, you're winning more than you're losing. So at that point, just size a little less. Like that's what I always do when we're in a neutral market. I'm sized down. When we're trending, I'm sizing more. Like it just makes more sense. When the odds are in your favor, you size up. When they're not in your favor, you size down. That's just how you maximize, you know, the gains and prevent the losses, because most losses I feel like do come from neutral markets because the price action isn't favorable. So yeah, that's just a little rant about that, but that's how you to play this week. I mean, it's a pretty simple week. Obviously, I'm going to go over the 0-day chart from what we looked like on Friday tomorrow, because that's just typically what I always do. So yeah, I mean, it was pretty much same scenario kind of as Thursday, but you know, that's for tomorrow's video. It was a crazy week. Obviously, you know, Monday's coming around. It's like, what are we going to do on Monday? Who knows? I mean, the market is, you know, nothing's guaranteed with the market, but obviously it would make sense for like a bounce to come. But, you know, it was just a wild week, in my opinion. There was still money to be made. Obviously, you guys see from these charts, there's always money to be made. And the good thing is, in a bear market, or let's just say like if we did happen to be in a bear market, whatever you want to call it, there's all like it's the same type of trades, man. Like I've been seeing videos on like TikTok, and people are like, if you like, this is how you navigate a bear market. I'm like, dog, what are we talking about? It's the same exact, like you should be trading, you should be able to trade both directions. And that's what a lot of people's strategies don't entail, is not being able to trade one side versus the other. Like they're only focused on like one side pretty much. Like, okay, like my strategy performs best when we're going up or going down, but it's like with the system, you get the best of both worlds. It doesn't matter what way we go, we're gonna catch it, because these charts are designed to catch big moves. And you know, when we trend, we are able to catch it. We know exactly when to buy, know exactly when to sell, and you know, you're able to just milk out more points versus holding that entire day. And you know, say you catch 300 points on the day, on a green day, but with the system you can catch like 400, because we get the cross, you know, you start to scale out over 100 points, and then once that 10 SMA breaks, that's when you cut it, and then you buy again at the 50, ride the trend up, catch another 100, buy the 50. Like it's just like a loophole of like what you got to do. It's just a repeat thing that, you know, you do every day with the system. It's just very simple, very easy, and like I said, best way to trade in my opinion. But that was a little bit of what we did throughout the week, or most of what we did at least. That's the trades that you could have taken. If you guys enjoyed, drop a sub. If you guys got any questions, drop a comment. If you guys want to learn, join the Discord down below. You know, that's where all the trades are shared and where all the knowledge is at. Obviously, if you watch all the YouTube videos, you won't even need to be in the private, but if you want the extra guidance and see exactly when we enter, how we enter, and things like that throughout the day, you know, that's the place to be. But that's all I got. I'm out. Peace.